Good evening, everybody. Tonight we got the great pleasure of having Steve Primo back with us. Stephen's probably one of the most experienced traders that you're going to come across. He's actually been a floor reporter and runner on the floor of the Pacific Stock Exchange. He became a specialist on the floor for Donaldson Lufkin, and he has been in the business for years of educating investors how to trade successfully. So with that, Stephen, welcome again to the Candlestick Forum. We're anxious to see your information.
Thank you very much, Steve. Thanks for inviting me. Thanks to Candlestick Forum, and thank you especially to everyone coming out tonight. And this promises to be a great educational presentation because I'm going to share with you two things, as you see here, that you can immediately start to do to improve your trading. And I think one of the reasons why we focus on improving your trading is there's been a lot of volatility and a lot of craziness within the markets as of late, and a lot of people are confused. They don't know which side of the market to be on, bullish or bearish. They're confused with a lot of indicators or fundamental news. And I'm going to really simplify it for you the way it was simplified to me when I first started trading some 4 decades ago. For example here, I'd like you to look at this. We started out just 2 months ago crossing the 26,000 mark in the Dow Jones Industrial. In fact, MarketWatch reported that it was the first time ever that the Dow had closed above that benchmark number, the first time in its 121-year history. And as you can see, if we look at this older chart here, we had a really nice run-up in the Dow, and we were going virtually straight up. And then just about 2 to 3 weeks later, guess what? The Dow plummets more than 1,000 points, closing below 24,000. So just in a couple of weeks, we lost over 2,000 points. This is the very beginning of February, about a month ago. And you see the market went straight down after that. Now, since that, we've gotten even crazier. We've gotten straight back up, roughly retracing a lot of those losses. And as you can see today, we were down momentum losses today, roughly around 700 points in the Dow. So this lends us to ask the question, how do we trade this current roller coaster of the market? Well, today, I'll give you 2 edges. Now, these are not strategies, these are not systems, but 2 edges that you can apply to any method you're currently trading, regardless of what it is, regardless of what it's based on. But we really feel strongly that it will be able to improve and help your trading in this current roller coaster. So this promises to be a great educational presentation. Welcome once again. My name is Stephen Primo. As Steve said, I'm the president and founder of Specialist Trading. I've been trading for 41 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. Now, a specialist doesn't mean that you're any more special than anyone else. It just means that if you want to buy or sell a particular equity or stock or issue, you have to go to the trader who specializes in that, who makes a market. So I made markets in roughly about 60 stocks. I did that through the crash of 1987 and the big bull market that followed after that. I've traded just about every market environment you can think of, straight up, straight down, sideways markets. I've traded just about every system, every technique, every strategy you can think of. So in my over 4 decades of trading, I know what works in terms of consistency, and I know what doesn't. So roughly about 8 years ago, I teamed up with ProTraded Strategies, and we formalized Specialist Trading, where all we do is teach and mentor our students around the world in over 110 countries and in virtually every state in the United States, all the things that I've accumulated in my 4 decades of trading. So hopefully we'll be able to educate you in this presentation as well. You can start using these 2 edges as soon as tomorrow if you'd like. But before we begin, as always, we are first required by law to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results, a lot of charts in different markets and different time frames, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And please remember that all examples are strictly for educational purposes only. As you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down, abbreviation for Specialist Trading. Every day I post different information, anywhere from little bits of financial wisdom along the way that I've accumulated to actual signals that our strategies have generated. So lots of great free information. Feel free to follow us on Twitter. Now, as I stated right off the bat, we are a little bit different from most companies in the fact that we are first and foremost an educational company. My goal is not to force feed you signals. My goal is not to force feed you and tell you to have the perfect system or the perfect time frame or market to trade. My goal is simply to teach you so that you can be in charge of your own trading. See, this is why in my 40 years, I found out a common denominator. One of the reasons why most traders fail is because you're giving your power away. You're not relying on your own instinct or your own knowledge to make your own decisions. So you need a good mentor, a good teacher, such as Steve Bigelow and myself, to show you the way. But then once you get the information, you have to have the responsibility and the courage to make your own trading decisions. This, in my opinion, is how one becomes a consistent trader. So as you can see here, my goal is simply to teach you how to trade with the specialist edge. And this is the same edge that was taught to me some 40 years ago when I was struggling, because believe it or not, I struggled tremendously my first year or two on the floor. Even though I had advanced information, I had a book where I knew where all the orders were, I knew where all the support and resistance, so-called support and resistance was, I knew where all the institutions were interested in buying or selling, I had advanced information, plus I had about 20 or 30 indicators plotted on my screen. Well, guess what? I couldn't make a dime. Every once in a while, I'd have a couple of good trades where I thought, okay, things are going great now, I'm back on track. And then I'd have that one trade where I give everything back. Okay, does that sound familiar to anyone? I'm sure it does, because it's very common throughout the industry where you don't have a consistency in your trading. Well, here is what my mentors said to me when they saw I was struggling. These were two specialists themselves who had been trading about 40 or 50 years individually, and they saw how much I was struggling, and they said, Steve, it is the easiest thing in the world to overcomplicate your trading. Anyone can do that. And if you think about it, it doesn't matter if you've been trading 20 years or 20 minutes. It doesn't take a lot of character and knowledge to pile on more things onto your trading plan. I mean, you can put on tons of indicators. You can be involved in every chat room. You can have every system or strategy charted on your platform. And you can be listening to every news event with bated breath. But it doesn't guarantee that you're going to make any money. Trust me, take it from someone who tried that 40 years ago. It didn't help me at all. So it's the easiest thing in the world to pile on more things, to overcomplicate your trading. As they stated, anyone can do that. But it's the most difficult thing in the world to simplify your trading. Now, when they first taught me this concept, I didn't want to accept it. I thought, okay, sure, yeah, right. But as I matured and grew a little bit, I realized that, you know what? It's the guys who have been around for decades, not just, 5, 10 years, but for 20, 30, 40 years, who have the simplest of plans. And oftentimes you don't believe them because it's just too simple. You can't think that anything that simple and that easy can be consistent, can be successful. But it really is. So here's what I'm going to be sharing with you today, because taken from first-hand experience, once I started stripping away all of what my mentors called useless noise, all of the tons of indicators and the chat rooms I was going to and all the different news letters I was subscribing to, once I got rid of that, my trading started to become more consistent. So this is what I want to teach to you today, how simple it is to be a consistent trader, just if you have the courage enough to let go of a lot of the things that really have no consistency. Okay? Now, this promises to be a great educational presentation, but just like a classroom, I want to take each and every one of your questions, but if we stop for every slide to answer a question, we'll be here for a good 3 or 4 hours, and I don't want to take all your evening time. So if you kindly wait till the end of today's class to ask any questions, I promise I'll get to them in about the next 20 or 30 minutes, okay? Then we'll reserve the last 15 or 20 minutes for questions, okay? So if you happen to join us later, please wait till the end to ask any questions. Write them down and try to remember them. All right, so let's begin with today's presentation. Step number 1. Buy signals can only be entered above the 50-period moving average, okay? Now, it doesn't matter what strategy, what system, what method you're trading. It really doesn't matter. But if you get a buy signal, your entry must be above the 50-period moving average. And conversely, let's say you get a sell signal, all right? Let's say you like to buy puts, or let's say you like to go short the actual stock, or maybe you sell the future. It doesn't matter, whatever market, whatever time frame, sell signals can only be entered below the 50-period simple moving average. Sounds too simple, right? Well, let's look at this chart of the spiders. This is a weekly chart going up to February, I believe, before the market started to fall out of bed. Now, traders love to play the victim game. They love to look at a chart and say, boy, I wish I had known that this was going to go up so strongly, and I would have taken advantage of that. But now it's too late, right? I mean, there's no way I can buy this now. I'll be buying at the top. But I wish I had known months in advance that this was something to be looked at from a bullish point of view. Well, there really was. there was a way to find that out, because all you had to do was add the 50-period moving average. And we can see well in advance that the market was telling us, way before the really nice run-up, that we were going much higher, as you see right here. You would have known months in advance that you should only be buying. Now, obviously, sure, there could have been some nice sell signals here, but you would have to been fast and quick to take advantage of them, because look what happened right after that. If you tried to short a top, you would have had to been very quick, because look what happened after that. So it pays to be in sync with the overall trend. Now, this not only works to the upside on a weekly chart, it can work to the downside as well. This is the way most traders trade. They'll say, boy, Steve, some guy recommended this in a room off of some signal, and you know what? When we had this gap down and then closed higher, I bought it here, and it worked okay for a couple of weeks, and then it went lower. So I doubled up, and it seemed to firm up there, and then it went lower. So now I tripled up, and things were looking really good until the bottom fell out. Now I really have a problem. I'm hiding my statements from my significant other, and I don't know what I'm going to do. I'm really long. I just turned into a long-term investor, okay? Well, you could have known not to even touch this if you had simply added the 50-period moving average. Because you always ask yourselves, where is price in relation to the 50 before you do anything? Remember, it makes no difference what strategy or technique you're trading. All you have to do is ask yourself, where is price in relation to the 50? Now, have you seen this in advance, regardless of what some guru said on TV or what the earnings were, you would not have touched this with a 10-foot pole. Why? Because price was below the 50. You should have only been looking at this from a bearish point of view. Now, I know a lot of you are finding this too easy and too simple to really have any type of value, but let me give you a little assignment right here. Go back and research your last 10 to 20 trades, okay? I can almost guarantee you that the losses you had, the reason why you had losses were because you were out of sync with this simple rule. You were probably buying below the 50-period moving average and selling above the 50, okay? So just go back and test for yourself. Do your due diligence and see if this could have helped you, all right? All right, so now we have the first concept, edge number one. You know what that is. It's that basic. It's that simple. I didn't believe it when they first told me either, but once I first started applying it, my trading started to become consistent, because for the first time, I was on the right side of the market. But here's where students have trouble. They think that this is a system. They'll be watching a stock or an intraday chart, and they'll say, well, we just closed above the 50. That means I buy at the market, right? No. This is not a buying or selling strategy or a technique. This is telling you just where you should be looking at the market, what you should be coming from. In other words, a bullish or a bearish point of view. Once you know what side you should be on, then you have to add some structure. So this is where step number two comes into play. If you are above the 50-period moving average, a buy signal must close in the top 25% of its range. So remember, once again, it makes no difference what technique or method you're trading. If whatever you're trading generates a buy, you want to see that bar where all the rules come into place, where all the requirements have been met. You want to see that bar close in the top 25% of its range. So if we look at this generic bar right here, we're talking about the range from extreme high, from the top of the wick to the bottom of the wick. The range does not mean from open to close. The range is from the top of the wick to the bottom of the wick. So what you want to do is simply divide that bar by 4, and if you close in the top 25%, well, then that's the bar to go ahead and buy off of, okay? And students always say, well, why? I don't understand. Why do I have to wait for that? Because that's the market. That's not some guy in a chat room. That's not some guy on TV or some earnings report. That's the market telling you it wants to go higher. And after all, why should we be listening to anything else? That's the only thing you should be listening to, the market that you're trading, right? So it doesn't matter if you're trading a 5-minute chart of the E-mini or a weekly chart of Netflix. It makes no difference, or if you're trading Bitcoin. If you get a buy signal, you're above the 50-period moving average, and you must only buy when you see this first bar here that closes in the top 25% of its range. You will have a higher level of consistency if you wait for that. Because how many times have you gotten a buy signal, whatever method you're trading, the minute you buy it, it goes straight down, right? Well, most likely it's because it didn't close in the top 25% of its range. So wait for that bar, even if you have to pay higher. Step number 2, on the sell side. Well, if price is below the 50 period, well then a sell signal must close in the bottom 25% of its range, okay? So if you see a generic bar like this, you just simply measure the top of the wick to the bottom of the wick, okay? Simply divide by 4 separate but equal parts. If you close in that bottom 25, that bottom quarter, that's a valid sell signal. Now you can sell. Now you can buy the puts. Now you can go short, okay? Does not matter what time frame. I purposely deleted what time frame this was or what market it was, because I don't want you to think, well, I guess this only works on stocks, or I guess this only works on bonds or on futures. It works on any market and any time frame. So let's look at those examples again, okay? Here's the weekly chart of the spiders that we saw earlier. Now we first noticed that, well, it was going higher. We applied the 50-period moving average, and we see, okay, well, we're only going to be a buyer. We're not going to be selling. And if we apply that technique of looking for a bar that closes in the top 25%, look at the buy signals that were generated using a strategy that incorporates those two edges. And how about the example in DKS where we're going short? Okay, we're below the 50-period moving average, so we know we don't want to be a buyer. We only want to be a seller. So we look for bars that close in the bottom 25%. And we also have to add a little bit more structure, but using the strategy that incorporates these two rules. Look at all the sell signals that you could have taken advantage of. Now do you see how easy it is to become a consistent trader? These are two things you can start doing tomorrow to start increasing your odds for consistency, because you're in sync with the overall trend and you're listening to the market tell you when it's time to get in, okay? Just based off if it closes in the top or bottom 25% of its range. Now someone looking here would say, well, Steve, what strategy is that? Well, this is one of our most consistent strategies we have in our courses at Specialist Trading, and these are two of the edges that make up this strategy, and this is strategy number 4. It's our most consistent strategy to date because it incorporates these two edges, and I've actually given you half of the rules. I believe the strategy has 4, possibly 5 rules at top, so I have to look at the rules once again because I've been trading it for 4 decades now. I just know automatically when a setup is generated. But you have nearly 50% of the rules of this particular method right now. This is how simple our strategies are and our methods of trading are, but they are very powerful and very consistent. Now let me show you some more examples of strategy number 4, but they will both incorporate all of the things I just shared with you today, just to show you that this is how simple this is and how it really works. These are actual signals that were generated, and members of our course could have seen these signals on a nightly scan the night before. All right, so let's look at some buys first of all. All right, someone looking at this chart, STT, would say, well, Steve, I don't know how you can find out whether you should be buying or selling, because if you look at this chart, we're basically going sideways, right? And I've always been taught you never want to trade a sideways market because that's where you get whipsawed. That's where you buy and then you sell when you get stopped out, and then it goes right back up. It's in a range, okay? This is the way we're all taught. I was taught this way, myself included, until my mentors said, Steve, first thing you always ask yourself, where is price in relation to the 50-period moving average? That will tell you what you should be doing. So we apply the 50-period moving average, and where is price? Price is above. So are we going to be a seller? Absolutely not. We're only going to be looking for buy setups, okay? And now what do we have here on the last bar? Well, we have a bar that closed in the top 25% of its range. So that's rule number 2 in the series of edges that I just gave you that has been met. Now there are 2 more rules that I can't divulge because they're part of the strategy, but just to show you how we incorporate these, we're not just blowing smoke. These are actual rules that we use in the majority of our strategies. Look what happened. That was a buy signal that was generated, and in the next 3 weeks the stock gained 16 points. Now we had no idea it was going to go up that high, but it didn't matter because the market told us it wanted to go higher. So that's all we do. Our job as traders is simple. It's not to foresee what the earnings are going to be. It's not to try and figure out what the support resistance is. It's not to listen to the institutions. It's simply to listen to the chart in front of us because it tells you what it wants to do. It's just that we've never been taught to listen to the chart. We're always taught to listen to some guy in a chat room, or we're taught to listen to what some guys on TV are saying, but we never learn to listen to the market. So this is what we do at Specialist Trading. We teach you how to listen. So all you have to do is once you understand what it wants to do, you just jump on board. Another example here, okay? We are above the 50-period moving average. We have a bar that closes in the top 25% of its range, and the rest of the rules of the strategy are met, and the stock gained 10 points in the next 2 weeks, okay? See how simple this is when you're on the right side and you're just adding a little structure to the overall trend. Okay, we see here that this was in December, actually, going back about 3 months. We were above the 50-period moving average. The market had increased in value, but now it was going sideways. Here's a bar that closes in the top 25% of its range. It's above the 50, and all of the other requirements of the strategy are met, and it went up 22 points coming into February. Now, the beauty of these techniques and edges we teach you is if you have a strong enough trend, don't worry if you miss the very first setup, because many more will be generated all along the way. So it'll give you, the market always gives you second, third, sometimes fourth chances to get in. Now here we have a cluster of buy signals that were generated, but nothing much has happened. Sometimes it takes a little bit longer to get going, but ultimately if you hang in there and you have proper money management, which we teach you in the course, well then the rally will kick in oftentimes. Not guaranteed, but oftentimes if the rally is strong enough and you hold out long enough, you'll get a nice profit. As we see here, you would have had 24 points to work with. Now here's a little bit more aggressive style. As we see here, we were originally above the 50-period moving average. We had one bar that closed entirely below. This is where new students get confused. They say, well, Steve, this bar closed below. How can I buy? Because remember, the setup bar is all you're concerned about. All right? Even though it would be ideal to see all the bars above the 50, all we're concerned about is the setup, wherever all the requirements are come to play and tells us it's okay to buy. Because at this point, we closed above the 50, we closed at the very top of the bar, all the rules are met, and as you can see, the stock gained 10 points in 3 days, as you can see with this nice big gap. Obviously, there was some news that caused that to gap up like that. Did we have any idea? Absolutely not, because following news is not in any way required at specialist trading. I haven't looked at the news in 40 years, so I wouldn't have had any idea it was going to gap up like that. In other words, the CEO of the company didn't call me up 3 nights in advance and say, hey, tell your members to go long because we're going to have an announcement and gap up 10 points. The market told us it wanted to go higher. So that's all we had to listen to. Another example right here, as we can see, there was 2 signals generated. This was just a week or so ago. A buy signal here, a second, and another one, a buy signal on the third, as you can see, and 15 points coming into this week. Okay. And another more aggressive play right here. We are above the 50. We close in the very top 25% of the range. All the remaining rules of the strategy are met. And GWW went up 70 points in 3 days. Now, we know this is expensive stock, but wouldn't you have liked to have had puts, or I should say calls, and sold the puts on that particular day the signal was generated? Wouldn't that have been a great signal to take advantage of, 70 points in your favor in 3 days? Once again, we had no idea since we don't follow fundamental news. It's okay if you want to. We're not here to tell anyone how to trade. Our job, our goal is simply to educate you on the things that have shown high consistency in the past 4 decades. Now, I know a lot of you are saying, well, Steve, sure, this is when the market was going straight up. Basically, all you had to do was throw a dart at the market and you could have made money, okay? Well, maybe you're right. Let's look then basically at the same time frame and see if there were any sell signals generated, all right? We're looking here. We see this is a little bit more aggressive. Majority of price was above the 50-period moving average coming into the new year, but we had a bar that closed in the bottom 25%. Another 2 closed in the bottom 25%. So a cluster of 3 sell signals were generated, okay? And the stock fell 7 points and had a nice gap down as well. Going forward, we have another aggressive trade here. Price was initially above, and in fact, we had a buy signal generated here, but you would have been stopped out, and this is what we mean by consistency. Consistency doesn't mean that every trade's a winner. Consistency means that you will have a 2-step forward, 1-step back approach, where every time you have a small loss, if you stick with it, many times you will make back that loss rather quickly and make more. So as we see here, we had a loss being long, but then all you had to do was take advantage of the sell signal that was generated, and in the next 4 days, 9 points to the downside. You could have made back the loss and a little bit more if you wanted to. Here's another example of consistency. A sell signal was first generated here in AIZ, and you most likely would have been stopped out with a small loss. You would have sold, and it went up higher. But stick with it. Don't just, lick your wounds and walk away and take your ball and leave. You have to stick with it because that's what consistency means, coming back to trade another day. So had you been stopped out, well, guess what? A week later, 2 more signals were generated. Had you taken those 2 signals, you could have captured back what you lost and made a little more. And even if you had missed that, well, there was a cluster of more sell signals generated a few weeks later. As we can see here in MCD, we are having a more aggressive type of trade because all of the bars are entirely above the 50-period moving average. So obviously the market is telling us it wants to go higher. But what do we have here? We have a bar that closes below the 50 and it closes in the bottom 25% of its range. So this is a little bit more aggressive. We wouldn't recommend beginners to take this trade, but if you wanted to, had you been studying the method for a while, you could have taken advantage of that, bought the puts, whatever you wanted to do, and the stock fell 18 points in the next couple of weeks. So this is all happening at the same time you saw all those other buy examples where the market was going up. And then another example here, as we see, we're above the 50-period moving average. Again, we have 1 bar closing below, but it meets all the rules of the sell, and it gapped down the next day, 25 points. Once again, did we have any idea it was going to go down that strongly? No. All we're doing is listening to the market and then jumping on board. Sure, in our courses, we teach you specific exit levels that you can take advantage of. But trust me, if a stock gapped down 25 points the next day, I think most of us would just take our profits and run and say thank you, right? Here's another example of a cluster of sell signals. This was coming into, I believe, January. As we can see here, while those other stocks were going straight up, this one PSA, I believe, was giving us sell signals all the way below its 50-period moving average. Nothing much happened until it finally clicked in, and coming into February, you would have had 27 points to the downside. Now, if you wanted to get out with a 1-point gain, that's fine. That's up to you. If you wanted to take 10 points out of it, that's fine. It's up to you. We teach you different exit levels, but ultimately, it's your decision. Remember, we're not a systematic company. We do not have numbers of win-loss ratios and things of that nature because everyone should trade differently. In fact, we encourage that. We don't want you to mimic the way someone else trades. You have to be in charge of your own trading. Remember, the great truth I learned 4 decades ago is that no 2 traders should ever trade alike. So the reason why it's been estimated upwards of 85% of all traders fail is because basically you're giving your power away. You're relying on someone or something to tell you how to trade. When you trust yourself, learn from a good a mentor such as Steve Bigelow or myself, and then take the information and then make your own decisions, that's when you can become a consistent trader on your own. Now here's a signal that was generated in the diamond. That's the ETF for the Dow Jones. Okay, now this is just recently, this past week. Now everyone knows that the market's been falling out of bed. Wouldn't you have liked to have seen these 2 sell signals that were generated just last week? These are in the diamonds, and as you can see, we all know the market has fallen out of bed. Now the actual ETF fell 10 points in the last 8 days. But if you wanted to use that to, comparably to see what the market did, the Dow Jones, that equals 900 points to the downside. Okay, just using what we gave you here, just these 2 little edges, because this was an actual signal that was generated from the strategy we were talking about that incorporates these 2 edges that I shared with you. All right, now a lot of people are saying, well, okay, I don't trade stocks. You showed a lot of examples. You showed some winners. You showed some losses. You showed how you could make back the losses. That's great, but I don't trade those markets, and I don't trade those time frames. That's okay. Let's look at an hourly chart of the E-mini, okay? We are originally above the 50 period. We're oscillating above and below, and what do we have here? We have a bar that's completely below and in the bottom 25% of its range, okay? This is an hourly bar, all right? A valid sell signal was generated, and the E-mini fell 115 points in the next day, okay? You think you could have taken advantage of that signal, all right? How about right here? This is a 4-hour chart of the euro dollar. Once again, there were multiple signals generated. Nothing much happened until we finally clicked in later here, and you would have had 275 pips to work with. And then we all know that the interest, the darling of about a month ago, was Bitcoin, all right? When Bitcoin started to act unfavorably, we told all of our members, well, ask yourself, where is the tradable unit in relation to the 50 period? And once it crossed below the 50, regardless of what time frame you traded, you're a seller. You don't think about buying it, all right? Now, right now it's below its 50, so we're not telling any of our members to look to go long Bitcoin. Wait till it goes above the 50. All right. Had you done that about a month ago, you would have lost a lot of money. Or as we see here, it's much better to be in sync with the overall trend. And as you can see, a sell signal was generated that would have produced roughly about 5,000 basis points to the downside in Bitcoin. Now you can also use this and apply it as a directional tool. Now here are the QQQs. As you can see, this is going back to January. We're above the 50 period. And as we see here, we have a bar that closes in the top 25% of its range. Now the remainder of the strategy rules were met. So a valid buy signal was generated and the QQQs went straight up coming into February. Okay? So this is one thing we tell our students. You don't have to actually trade when the signal is being generated. For instance, if you apply it on an indice or on an ETF, you can just use the underlying market to trade the underlying market. So in other words, instead of buying the QQQs, one could have purchased a stock within the index. So you can use this as a directional tool. Remember, I showed you sell signals in the diamonds. That was telling you that the market was going lower, right? This was before we had the great drop that's happened this last week. So, as we get ready to go to question and answers, I'd like to ask you a question and ask yourself honestly, do you think these two edges could have helped your trading this past year? Remember, go back and look at your last 10 or 20 trades. I can almost guarantee you that if you would just use the first edge, the 50-period moving average, you would have increased your odds for consistency because most likely the losses were due because you were buying below the 50 and selling above. Now, if you like what I've taught you today and what I've shared with you in good faith, just giving you these things for free, because these are actually two of the rules of one of our most consistent strategy, would you like to learn more edges like this? What if I could give you 3, 4, 5 more edges just like this, but entirely different? Well, here's the great special discount we have for all the attendees today because of our association with Candlestick Forum. We have a great offer for all of you joining us this evening. We're going to offer you our online course. This is Trading Floor Edges. This is a new online course. It's a 10-video series of many more high-probability trading edges. They're completely different from what I taught you, and they're different edges that will increase your odds for consistency. I go into talking about what I learned from other floor traders on the floor. I talk about a powerful exit plan, a consistent candlestick technique, trading what I call the confirmation method, and as well, once you become a member of this online course, you will also get mentoring correspondence with myself via email. So you get my personal email address, and you can contact me anytime you like with a question, and I will answer it. This is a great, great online course. Remember, a complete 10-video series, and this really has roughly, I would say, about 41 years of knowledge and education that I've accumulated into an online course. Now, it's jam-packed with so much information and trading knowledge that my sister site, ProTraded Strategies, they have this listed on their website for close to $1,000. But because of our association with Steve Bigelow and Candlestick Forum, we are offering it at a deep discount tonight for, I believe it's only for 48 hours, because then it goes back to $1,000 roughly. $39 for a limited time only. This is an online course. There's nothing you have to wait to be shipped to you. It's strictly emailed to you. You get a link, and you can watch all these different videos online, okay, at your own leisure, whenever you'd like. So you can watch them on your lunch hour if you like. You can watch them on the weekends, and they're yours forever. This is not something where the videos disintegrate in 2 weeks. They're yours for life, and as well, you can contact me with any questions you'd like, okay? So here's how to take advantage of this great but limited $39 offer. Contact my sister site, which is ProTraded Strategies. They handle all of our course discounts and all of our information regarding that. You can either email them at trading@protradedstrategies.com or call them directly at area code 310-598-6677. Now, if you want to go up to that $39 sign-up page, that's the link at the very bottom. Unfortunately, that's not a live link. I don't know if they're going to post a live link on the general chat, but it's simple. All you have to do is copy and paste this link. Just drag your mouse over the link on the bottom and then paste it onto a browser, and it will automatically take you to the sign-up. Now, if for any reason you're having difficulty logging on or getting that available, don't worry. You can either email ProTraded Strategies at the email address provided or call them directly at area code 310-598-6677. They have trading consultants manning the phones right now. There's no obligation. They'd be happy to answer any other questions you may have, and they'd be happy to assist you if you're having trouble with that $39 offer. But remember, this is only for a limited time only. If you sit on it, or if you wait for this video to watch it over and over, and then maybe next week you say, well, you know what, there was some pretty good information Steve Primo gave us. I think I'll take advantage of that floor trader edges. Well, by the time you call up, the price will probably be back close to $9.97. So I would not sleep on this. $39. I think most of you, if you traded today, probably spent more than that just in commission costs alone getting in and out of the market. This is a great, great offer, so please take advantage of it. I'll leave this slide up here, so if you have any questions, you can contact ProTraded Strategies. As I stated, they have technical support right now, and they can man the phones and answer any question you may have, okay? Okay, so I'll answer some questions right now. Daryl says, it doesn't matter what stock or time frame. No, it doesn't, Daryl. It absolutely makes no difference. Today I was trading using these two edges on tick charts in the E-mini. This morning, before another webinar I had, I was intraday trading the E-mini futures, and I was using these very, very same things in my own personal trading. And so, I know it seems simple, and I know it seems too easy, but it's the simple things that work. And I'm sure Steve Bigelow will tell you the same thing. You want to learn from people who have been around the block, who've not been just trading for a couple of years, but who've been trading, 20, 30, 40 years, and really know that the markets are just, basically just the sum total of what people are doing and feeling. And if you learn how to listen to that, well, the message is really clear to read. But just we have to learn how to listen to that, okay? Let's see, Paul is saying, you are cherry-picking your buy signals because in most of your examples, charts, there are several previous candles closing at the top of the range. Oh, Paul, I think you may have joined us later. The reason you're confused is that, remember, we said the reason why those are buy signals is because there were other requirements to the strategy. Now, sure, there were tons of other bars that closed in the top 25% that didn't meet the requirement rules. Now, I can't give you those rules because it wouldn't be fair to the people who have purchased the course already. So that's why you're a little bit confused and thinking that how come those other bars weren't giving signals? It's because there are 2, possibly 3 other rules that need to be met. And just because these 2 rules are met doesn't mean that a buy signal is generated. I was just sharing with you what the strategy 4 signals were. Yeah, there were strategy 4 signals. Okay? I hope you understand that. Let's see, I agree. Based on what I'm stating, I'm a novice compared to you guys. Well, everyone is a novice, until they continue to trade more. Remember, I worked on the floor. At the time, this was a good 40 years ago, but I had access to advanced information. I had a book where I had orders where Goldman Sachs and Merrill Lynch had given me orders for 500,000, 20,000, 50,000 to buy or sell. So I knew where the support and resistance was. And I knew when they canceled those orders. Sometimes the orders would last for 5 minutes and they'd cancel them. Sometimes they were sitting in my book for weeks. I had advanced charts. At that time there were no charting. There was no intraday or daily traders. All right, you couldn't day trade on your own. You had to actually go to an office. There was no programs or platforms that allowed you to trade from home then. So I had this in front of me because I was trading on the floor of the exchange. Okay, I had a high-speed computer. My orders went instantaneously to the floor of the New York Stock Exchange if I wanted to buy or sell something. All right, I had newsletters I subscribed to. I had advanced information, and guess what? Nothing worked. All right, I traded for the first 2 years down there on the floor, and I'm not saying that I went bankrupt, but I was basically just trading water. And I was using all of the same things that you're taught today about, support resistance, fundamental news, Fibonacci, and all that stuff. And if it didn't work then with consistency, it's not about to now. So my mentors saw how much I was struggling, and they taught me these simple things. And they said, Steve, you're overcomplicating everything too much. Simplify your trading, and you'll start to be consistent. And I think once I finally gave in and accepted those concepts, that's what made me a consistent trader, and that's what's allowed me to be trading for the last 40 years. So this is all we're trying to do. We're trying to teach you to do the same thing. We want you to be a consistent trader. It's not in my interest to have you have a good year trading and then have you give it all away. I don't want you to be trading that way. I want you to be trading 20, 30, 40 years down the road. There's enough for everyone to go around. We're not competing with each other. So it makes no difference if you learn the same things that I've learned. And I'm just trying to help you get to that point where you can be on the right track, okay? William is saying, Steve, will the video for $39 explain the rest of Strategy 4 to go along with the 2 edges you have given us today? No, I'm sorry. Strategy 4 is a course in and of itself. It's one of our best courses, but I believe it costs about $4.95. but there's more than enough information here to really help you. And for $39, we're just trying to get acquainted with you. We don't want to have a nice nightly webinar and say, well, guess what? If you want to learn more, you have to spend $500. I wouldn't feel fair doing that. I wouldn't want to do that to Steve Bigelow, and I wouldn't want to do that for you, taking time out of your Thursday evening. So we're trying to get acquainted by giving you a nice, inexpensive offer with tons of information so that you can see in good faith that we're really trying to educate you. We're not just trying to make tons of money and say thank you and goodbye, okay? Now, if you're interested in Strategy 4, sure, you can always ask ProTrader Strategies, but we're not requiring that at all at this point, okay? Do the videos provide an approach, the complete approach? How many other approaches are there? I don't understand, if you can define what you mean by approach. Remember, what I shared with you today is what you're going to be getting on that video. But remember, they're not CDs. This is an online course. They send you the link to these videos, okay? So you don't have to wait for a CD to be delivered. You can watch it anytime on your computer, on your laptop, or, whatever, on your desktop, whenever you like. But when you say approach, I'm not really sure. It's just very simple education and things you can use. You can either apply to your current method or you can devise a method based off of them, okay? What is the consistency and how do you accomplish that? In my field, we keep it simple. It seems like there are a lot of info systems out there, long or short term. Well, Philip, if you're not convinced that this is simple after what I just taught you today, I don't know. It doesn't get any more simpler than that. I mean, think of the two things I taught you today. If you want to be bullish, price must be above the 50. If you're going to be bearish, price must be below the 50. All right? It doesn't get much simpler than that, right? That's the basis for everything we trade. None of our methods, none of our techniques, none of our strategies will ever buy below the 50 and vice versa. So it doesn't get any simpler than that. If you're looking for something simple and with consistency, that's what we're trying to instill in you, okay? JP says, can we scan stocks who meet all the criteria you have? Well, yes, we do. Now, you can talk to ProTrader Strategies. We have a platform where we have ability to scan these things. But once again, I'm not talking about that today. I don't want to give you mixed signals. There are discounts for that. If you're interested, contact ProTrader Strategies. But I'm not trying to push that on you at all. For more advanced traders, with our strategies and with our methods, we have a scanner on our platform that scans everything ultimately in a matter of minutes every night. So with a touch of your mouse in about a minute or so, you can see where all the signals are for the next day. But for this, we also have scans, but that's only on our platform. So talk to ProTrader Strategies. I'm not here to talk about our platform tonight, though. Okay. How many hours is the video? I would say a good 5 hours at least. Some of the videos are a good hour. Some of them are only a half hour, 15 or 20 minutes, but they're jam-packed with information. A lot of great stuff there. So I would say at least a good 5 hours. But, don't quote me on that. Remember, I gave these a while back and recorded them, but I've given probably 1,000,001 webinars since, so I've forgotten how long they were. They're great, great information, though. As you can see, remember, we're all about educating you. I said that in the very beginning. Our goal is not to sit here and tell you we have the perfect system, we have the perfect market, or we have the perfect time frame. We don't believe in that. We say to our members, it's up to you to decide what time frame you want to trade. It's up to you to decide what market. But we have the tools and techniques and strategies that you can apply for whatever market or time frame you're interested in. So we work with you and mentor you, but then ultimately you're in charge of your own trading, not us. We're not, as I stated in that slide, my goal is not to force feed you signals. My goal is not to tell you what to buy and sell. My goal is simply to educate you. And then that will give you the power to make your own decisions, okay? Do you get a hard copy of the video to use at home? No, I believe it's only an online course. It's just strictly online, though. If you have the capability to make PDFs from the videos, though, you're more than welcome to do that, or to print out copies. Feel free to do that. But no, we don't have, most of our courses and techniques are all taught online, okay? Good questions. Any more before we sign off? Are the videos downloadable? Well, yeah, sure, if you want to. Yeah, they're yours. In other words, you can do what you want with them. They come on a link. In other words, we send you a link, and you watch the video. But then, if you want to download it, it's up to you. Sure. Okay. Hello, Mercy. Mercy is a student of ours. Mercy is asking, how many strategies do you have in this video? We have no strategies, Mercy. Remember, this is just education. The strategies are separate courses what we're just providing with are different pieces of education for entering, exiting, different ways in which to trade, okay? Strategies, as you know by now, since you are a student of ours, you know that strategies have their own course that have a complete way of teaching you. This is just an educational, introductory course to get you to know our concepts and our philosophies, okay? William says, Steve, did you say that strategy 4 works on 1-minute charts as well as other time frames? I said that strategy number 4 can be applied to any market, any time frame. I was applying it today on tick charts, okay? Now, in terms of works, that's up to you. How you apply your money management, how you apply where you enter. We have different entry points. We have different money management. We have different exit points. We have 2 traders that will trade the same signal and come up with entirely different results. So we can't say it works because it's up to you if it's going to work. It's up to you how you decided to trade it. But we give you the information and the tools, then you decide how to make it feel comfortable for you. So you can apply it, yes, to 1-minute time frames. You can apply it to Bitcoin, currency pairs, futures, stocks. We have numbers that apply it to commodities as well, okay? Let's see, someone is talking about 4 free videos to download, but then one must pay $7 for the first month trial. I believe, CB, they're talking about the platform. Contact ProTraded Strategies, because I think you're looking at the platform that you're talking about with the $7 offer, okay? Remember, ProTraded Strategies are the one to talk about tech support or discounts. That's why their email address and phone number is right here, because these are the ones to contact with any discounts, with any tech support, and with any courses in terms of online videos that are required to be sent to you. In terms of the teaching and the mentoring, well, those are sent to me, and you only get my private email address once you become a student of mine, okay? Okay, any other questions? I guess that's just about it. Remember, these are 2 edges that we just gave for you for free in good faith. And we're not saying that it's required for you to purchase this for $39, so we gave you 2 things that are important components of most of our strategies. So go out and do your due diligence. Research them for the next day or so, but don't sleep on this offer, because if you do, it might be up to $9.97, okay? All right? Juan Pedro is asking how many edges there are. I don't remember, Juan, but at least there are a good more 5 edges that you can apply what we teach you. All right, and I just gave you 2. So that would be roughly about a total of 7 altogether. But don't quote me on that. But there's tons of edges. There's edges in everything. So we just show you different concepts and different ways in which to view the market, things that have stood the test of time. And if you're, wondering whether you should spend $39, well then, you have to seriously consider whether you should be trading or not, because $39 is not a lot. And we're trying to show you in good faith that we just want to get educated with you, and we want to show you that we can teach you, okay? Brian is saying it's a good approach. It is a good approach. It has edges, and it's a good approach. Very good, Brian. That's exactly what we're doing. We're trying to give you edges, and that's the way we're approaching you. And plus, we're doing it at a very inexpensive price for $39. Very good point. I guess if we're at the end here, it looks like we're slowing down in questions. Remember, the link you see at the very bottom of the screen there is the link that will take you to the $39 sign-up page, okay? Remember, if you have any questions concerning discounts, if you went to the website, contact ProTraded Strategies. They'll answer all of your questions concerning discounts, concerning what exactly is offered, what's included in the deal, and what you will get sent to you and all of that information, okay? Anything, once you become a student of the $39 package, and any questions you have to say, well, Steve, I didn't understand this edge, or I'm not sure how this concept works, then email me directly and I'll answer your questions as soon as possible, okay? So, once again, any questions, contact ProTraded Strategies. I would call them directly and they can answer your questions, or just go to that link at the very bottom. But do so rather quickly, because in a couple of days, 48 hours, that price will go back up to $9.97. And you don't want to sit there and kick yourself and go, boy, I watched the video of Steve's presentation, and now I'm convinced, okay, I'm ready to do this. I went back and looked at a ton of charts, and boy, this stuff really works. I want to get some more edges, and now you want to buy it, and it's back to $9.97, okay? So take advantage of this while it's still a very inexpensive price. And I hope you got something out of this. I look forward to you all becoming members of our new online course for Traders Edges, and I look forward to teaching all of you all these different ways in which to increase your odds for consistency. Thank you so much. Thanks to everyone at Candlestick Forum. Thanks to Becky. Thanks to Jim and Stephen. And I look forward to seeing you next time. Bye-bye.